Hello everyone, I'm Alexander of Trader Help 101, and today we're going to talk about a subject that's familiar to all traders, and that's having losing trades. Before entering any trade, we have to plan for the loss because we're going to be wrong, and we might be wrong often. The percentage of winners for most traders are about 35 to 45% accurate. Yes, some traders are higher, but that also goes to show you that you don't need a high win rate to make money in the stock market. You have to just control your losses and make sure your winners are always bigger than your losers. And how do you do that? How do you control your losses? Well, what we're going to talk about today is that we're going to categorize. We're going to list our losses into these 4 different categories. And the first one is a planned loss. The second one is a respectable loss. The third one is an embarrassing loss. And the fourth one is a devastating loss. Now, this is per trade. And we could also add one more level, and this could be for your entire account. So no single trade should ever devastate your trading account, and we're going to go through every single one. So most traders have to work with what's called a planned loss. And this is where you do your homework, you do your research, and you say, you know what? My research tells me I'm going to be bullish at 100. I'm going to buy 100 shares here, and I'm going to put my stop loss, let's say at 95. That risk is 500. In comparison to my account, that's perfectly fine. It's going to be a very small loss, and I'm willing to play those odds because of the formation or whatever criteria you trade. I'm going to take this trade. So this trade thesis, this trade idea now has a calculated planned loss of $500. And that's where you want to operate the most. This is a position of power. This is where you build accountability and trust with yourself, because when you have to make these tough decisions about taking a loss, yes, it's frustrating. Yes, you're going to lose money. But more importantly, your mental capital as a trader is what you're trying to protect. Not so much your financial capital, because you're already working with a planned trade. So therefore, it's already measured. It's already calculated that if you take this loss, your account's going to be perfectly fine. So it may be agitating and frustrating, but it's not going to kind of derail you from your trading, and emotionally and psychologically, you'll be ready for the next trading opportunity. So now that it's a $500 planned loss, you're sitting in front of your screen, it gets there, it gets triggered, you lose 500, and you move on to the next trading opportunity when it presents itself, and you're perfectly fine. And emotionally, more importantly, you're fine and ready. Let's talk about number 2. Number 2 is a respectable loss. This is giving your trade a little bit more risk than your planned loss. For example, it reached your $500 level of loss, and you say, you know what? Most traders are always saying that I get stopped out and then the trade goes for me. This is where you enter into the category of respectable loss. And you want to give it just a little bit more leeway than 500, but still within the first 2, which is planned loss and respectable loss. Let's say for this example, you lose in the planned loss was 500, respectable can, let's say, be 700, 800. Does this trade is going to affect your account very negatively? Then you need to adjust those numbers, because you want to be able to have these categories where you're trading, but not so much let it affect your account. So now that you're losing $700, $800, you give it a little bit more leeway just to see if the stock can bounce off certain prices and certain support levels, and you want to do a respectable loss. At this time, you are going to have to be very, very, I wouldn't say concerned, but your attention is very high, your focus is high on this trade, because now it passed your planned loss and it's passing your trade thesis and the homework you did, because it was supposed to respect 95, and now let's say it's trading at 94, 93, and now you have a $700 loss in your hand. So something is wrong. Now, super, super important. If the trade doesn't work now, if you're an intraday trader or a longer term trader, it does not mean it won't work in the future. It's just currently the trading conditions or what the market is doing, the stock is not respecting these levels. So when you control your losses to planned loss and respectable loss, you give yourself the opportunity with your trading capital and with your mental capital to be ready for the next trading opportunity. And this is a good indicator that something is wrong once you hit respectable loss. And now let's talk about number 3, embarrassing loss. Embarrassing loss, now the stock, let's say, is losing you $1,000 or $1,100. Now we know something is wrong. We have to take action, but we are in a state of frustration. We are in a state of maybe paralyzation. We don't know what to do because now it passed so many levels. All we're thinking is we need some type of push up, and I'm going to try and close this for a smaller loss. I will take a loss, but I don't want to take this big of a loss. So $1,100 now is embarrassing. You're feeling down, maybe a lot of negative self-voices. You are kind of beating yourself up, but there's still time to take action. Don't let it get to this level, and that is devastating loss. A devastating loss is now, let's say, $1,500, $1,800, and now it went from $500, went through all the support zones, all the leeways, all the kind of wiggle room that you wanted the stock to play with these zones or these support levels. It has broken all these levels. Now the probability of you being right has gone very, very low. It's very low for you to be right in this trade. Not only that, you're hitting a devastating loss. So it's exactly that. Morally, psychologically, you're going to feel down, you're going to feel defeated, and you're not going to be ready for the next trading opportunity. It could be on that stock or any other trading opportunity, because now you're going to be focused on this devastating loss and what it represents to your account. So more importantly, stick with the 1 and 2, planned loss and respectable loss. Here's something you can do right away. Once you hit respectable loss, if you have 100 shares, close 50. Right away, you've taken action, you build accountability, and you trust yourself. But you can still say, you know what? It's a respectable loss, whatever your engagement with the market is, but at least you took action and you slowed down the speed at which the losses are occurring. Now, in the future, if the stock shows some type of bullish signs or more strength, you can always add those 50 shares back into that position and have your 100 again. But at least you took action, and that's more important than just letting the stock beat you up. Now, here is an analogy, and hopefully this helps truly a mind shift here. If you were to go to the ATM and you looked at your account and your bank account is getting lower and lower and lower, you're going to panic, right? Like, what is going on? Someone is stealing from me. Someone's taking money from my bank account. And you're going to right away call the bank and say, hey, put a stop on my card, on my debit card or credit card. Something's happening and money is being taken out of my account. That's the same urgency that you must have when you're trading, when you are within these zones. The stock market is truly taking money away from you. Would you paralyze at the ATM and say, you know what, whoever's taking money from my account is going to put it back, right? I mean, it sounds pretty wild, right? But we know that if something's happening, they're most likely not going to put it back, right? But because the stock market moves, this is the interaction that we have to build. This is the emotional resilience, and this is where the art of trading and experience and a lot of screen time will help you dictate when these occur. But once you hit respectable loss, action must be taken because you're already past your planned loss and you're getting closer to embarrassing loss. So in order for that to happen, just close some shares and slow down the speed. You feel a little bit better because at least you're losing, but you're not losing as fast. And if you know for some reason, if you let the stock continue to ride, the losses are not going to turn into 1,500 or more. But at least you took action. And that's more important as a trader, that you've taken action and that you build accountability, you build trust, and you're following your trading plan. So now that you know how to categorize your losses, and make sure you're always working in zone 1 and 2, and let 3 and 4 kind of be for very, very few trades, if any, that can really hurt you, your account that way, especially protect your mental capital so you're ready for the next trading opportunity. Hope this helped. You can reach me at traderhelp101@gmail.com. I'm Alexander. Until next time, trade safe.